Good Monday, everybody. It's November 17th, 2025. Our first headline today, Trump bullish on bonds. We have a headline here from CNBC.com. Trump buys at least $82 million worth of bonds since late August, financial disclosures show. And that's just the minimum amount possible by these filings, showing massive purchases of bonds from August through October. The maximum possible total value may be as much as or more than $337 million worth of bonds. Now, these bonds were corporate bonds and municipal bonds, otherwise known as Muni bonds. So while we don't know the exact value and we don't know the exact duration, the value of these bonds goes up if interest rates go down. And being the president, hey, if he's expecting interest rates to go down, maybe they will go down. And if they do, the Robschild portfolio will definitely benefit from that. So it's probably a good time. Link in the description. Read through my daily reminders, current macro views, and portfolio explained. Link in the description. This website is free for the moment. I think it's worth knowing about this information that I put on there. Second headline today, Bitcoin continues to fall, lowest in 4 months. Correction, 7 months. We now have to go all the way back to April of 2025 to see the low, this low of a price in Bitcoin. I did exit on Friday my Bitcoin short in this area because we hit the bottom of a parallel channel. And I also said I think Bitcoin is going lower here. And with today's candle, that is very, very bearish. I just want to point out this candle right here. It looks like, we have an hour and 23 minutes left on the clock. But as long as it closes below 94,000 today, my understanding is we are headed a lot lower. We're talking in the 70s now. That yellow line that we just broke marked the bottom of August 3rd, connecting to April 8th or so, and we broke it, and it looks like we're confirming below that level. And so I will short Bitcoin again if we retrace back up to this line around 97,000, and from there I'm expecting it then to drop to around 74,000. Basically this pivot bottom here in April. We should get there pretty easily at this point. Third headline today, Waller, Fed chair, one of the Fed members, says yes, rate cut, and the Fed funds futures say no. Another headline from CNBC reads, Fed Governor Waller backs December rate cut as support for weakening labor market. And the main quote from here I find really interesting is he says, I don't care what data comes out between now and then. The labor market is weakening and we need a cut now. And even though he says that, he doesn't have full control here. The December 10th meeting actually increased probability of no cut today from Monday. So we went from a 60% chance of no cut to a 64% chance today. I think what's going on here is Waller's hinting at that the data coming out is going to look stronger than what's needed for a cut. And he's more worried about not cutting because he sees further out and says, yeah, we're going to need these cuts. I want to add right here, we were entering a cutting cycle before anyone had even heard of COVID. And when we're at this part of the cycle, when we're cutting, if we don't have some major catastrophic event or major, escalation of conflicts between countries that involves military and all of that, without those things, what's going to be the reason for turning on the money printer as hard as they did for the 2020 situation? This is one of the reasons why I keep saying I think the Fed won't cut fast enough to save the economy. Waller right here is clearly seeing this coming, and he's not alone. Next up, community topics. What moves, if any, did you make today? Did you sell anything? Did you buy anything? I noticed Tandy Leather Company dropped a bit. They had earnings that are scaring off some hands. I tried to get some post-market today at the closing price. I think the balance sheet looks great. I'm still bull here, based on their latest balance sheet data. I see Tandy Leather Company as a fair value of $394 at a liquidating value with discounting the assets, specifically a 40% discount to inventory, which is a pretty good discount. And today's closing price is about 34% below that. So in my book, that provides a pretty good margin of safety. And so I'm trying to buy more at this level. Did you buy anything? Did you sell anything? Comment below. Coming up Wednesday in the PM, this is the really biggest thing of the week. It's after the close on Wednesday. NVIDIA has their big earnings report, the king of the stock market, the company that will never stop growing its earnings infinitely forever until it does. Or we'll find out on Wednesday. We'll get a pretty good update on that. We also have Wednesday in the AM a Target stock earnings update. That's part of the Robschild portfolio, Target stock. Also, Thursday in the AM, we get Walmart stock earnings. And I always really like their earnings report because they give a good insight to what's going on with the U.S. consumer. It's as important or more important than a lot of government data, when it comes to what's going on with consumers. We also have on Thursday the September employment report, which, my crystal ball says it's going to look stronger than people think at this point. And this is partly because of what Waller came out and was talking about today. And then December 5th, coming up, we have October's employment report supposed to come out then, and December 9th, November's report. And we also are waiting on 7 weeks of initial continued jobless claims. The claims report should come out on Thursday. I don't know how many of these they'll get. I assume they'll get at least the last week's initial and continued claims report. Don't forget about those tariff updates, guys. Over the weekend, my understanding is that Trump has been talking about getting rid of taxes or tariffs on coffee and beef. He's also discussing somehow giving every American $2,000 of this tariff money. I don't think he'll do that because it's not going to bode well for his new bond position. But anyway, that's just me and my crystal ball. Thank you for watching, liking, subscribing, commenting, and supporting. Let's dive straight into more data and charts. Today we had Empire State Manufacturing Survey come out a lot stronger than the forecast in previous. Japan, after their market close in Japan, they came out with their GDP report, and as you can see from this headline from the Daily Shot, Japan's economy contracted for the first time in 6 quarters. And we saw the Japanese stock market as a whole drop by 1.8%, including a piece of the Robschild portfolio, the Nissan stock. That's the reason it went down a little today. Next, we'll look at the heat map. Generally, there's a lot of red on this screen with one very notable company that went up 3%, Google. This is obviously because the news came out that Warren Buffett has been buying Google. So, hey, if Warren Buffett's buying it while sitting on a humongous pile of cash, then why not everybody? I mean, out of the Mag 7, it's got one of the lower PE ratios. Still has a good amount of growth priced in, but it's a lot lower PE ratio than the rest of them. It's at 28 right now. So the S&P 500 as a whole dropped by almost 1% today. RSP, the equal weight index of the S&P 500, dropped a bit more, 1.31%, notably closing below any candle that we've seen since August 13th. A lot of charts getting really bearish here. Verified Investing, Gareth Solway, for example, is calling this the cycle top. And it is important to remember, there are many periods throughout history where every dip is bought and then people get used to. As soon as it goes down a little bit, it just keeps going higher and higher. And it's easy to forget about those multi-year periods where the opposite happens, where things fall, people buy the dip and it goes less high and then it falls lower. And you have that happen over and over and over again until you get capitulation. So instead of, the manic phase, going straight up after, way past what anyone could possibly imagine, you can also have that happen on the downside. It's very important to not forget that can happen. When you own a stock, it's important to remember that you're relying really basically on two things. Is it paying a dividend? Are you making money off of owning this company directly? Or are you depending on other people to purchase the stock that you own for a higher price than you paid? Unfortunately, we are at such high prices that that's what people are just hoping for, that there's always going to be someone out there to pay a higher price than what they paid. And it doesn't always work out that way. The VIX closed above 20 today at 22. We are in fear zone now. Also, the VVIX, the volatility of volatility, is nearing panic zone. Okay, we're not just in cautious zone anymore. We're at 117.86. This is very, very close to 120 when things get panicky. With a close like this in the VVIX, you can bet pretty strongly that the VIX is headed higher, perhaps a lot higher. We also see a bit more volatility in bonds. The MOVE index, which measures the volatility of bonds, has been rising, and it's higher now than the previous high. For a long time, we've been finding lower highs, lower lows, found an ultimate bottom, and kind of spiked up recently. This, by the way, doesn't necessarily mean that bonds are going to fall. It could actually mean that bonds are about to explode higher, which can happen very easily when there's a stock market crash or mini crash. This is how I'm thinking it's going to play out. I think money is going to rush into the safety of bonds, but we'll see how it goes. Volatility index of the futures, we are inverted at the front end of the curve. Back end still higher than today, but that will probably change sooner than later. So again, with the VVIX being this high and rising, right? Higher highs, higher lows, going up. The 10-year Treasury note yield still stuck around, range bound between 4.16 and 4.8 about. So essentially going sideways. Same with credit spreads, HYG junk bonds divided by government bonds, essentially going flat today. If stocks really start dropping, it will pull HYG divided by SHI lower. And it hasn't done so yet, which I do find kind of interesting. The US dollar rose a little today, sort of testing this line that we broke down below. It looks bearish. I mean, the dollar, this chart is a very clear bear chart. The dollar looks like it wants to head lower. Crude oil still going completely flat today. Copper, essentially flat. We dropped 1%. Sorry, you can't see that there. I think it's just being patient. It wants to see the employment data more than anything else, as do I. The price of gold also dropped a little today, 1%. We're at 40.45 now. IWM small caps Russell 2000 still in this blow off top looking formation. We got a new close today that we haven't seen since the beginning of September. I mentioned on Friday, this just looks like a bounce more than anything. And yeah, we went down further today. Consumer staples caught my eye today, XLP, the ETF, just because we've been finding lower highs and lower lows recently. And today's candle is looking bearish. It looks like this may turn into another lower low, lower high situation right now. And the CNN Fear and Greed Index in 15 in extreme fear. I find this pretty especially fascinating. Again, how far are we from all-time highs still in the S&P 500? If we drop our measuring tool from all-time highs, 3.6%. That's it, 3.6% correction. And extreme fear. And it's not just extreme fear. It's like halfway down the extreme fear metric. Pretty incredible. 10-year break-even inflation rate went flat today. We're still at 2.28%. And that's it for today. I think overall part of the fear of stocks right now is, exactly in line with Waller, who is afraid of, economic and jobs data looking too strong, not giving a good enough reason for a December 25 basis point cut. As it stands, we are at a 64% chance of no cut. And so we may end up getting strong jobs data. And funny enough, because of the strong jobs data, the market takes that as bad news. And it's very interesting when good news can be the bad news. And combine that with NVIDIA earnings coming out Wednesday and nobody really knowing for sure what's going to happen with that. Again, because of the amount of growth priced into this company, if they don't have like a portal to another dimension where there's infinite gold at this point that they can just, pull out of their wormhole, at some point the music stops, and the markets are definitely sniffing this out, especially as data center growth starts to slow and reverse. The most exciting market day of this week will definitely be Thursday, because think about it. Wednesday PM NVIDIA, and then Thursday morning some jobs data, as well as the Walmart and Target earnings. Thursday's the big day this week. But for today, that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.